Hello grade 11s, welcome back to another video. So in today's video we'll be doing part 2 of the question paper, but it's a different question. So in today's video I'll be doing the accounting term 1 control test that was written on the 15th of March 2024. So this is from the Limpopo Provincial Government, Department of Education. So this is the question paper we'll be doing. I will be targeting specifically fixed assets, so I'll be doing the fixed assets question. And I will see the other one that I can do after the fixed assets. Maybe we'll do bank reconciliation. So let's see how the video goes. And please don't forget to like, comment and subscribe to the channel. Share with your friends as well. So I would like to go in depth of the fixed assets. If you're still having any problems with asset disposal account, the vehicle or equipment account, and the accumulated depreciation account, this video will be quite informative for you. And without wasting any more of your time, let's get right into it. All right, so here we have the fixed asset. So we have 2.1, where we have to define accumulated depreciation and the fixed assets register. And then 2.2, you are provided with information from the records of Manari Traders Ltd for the financial year ended 30 June 2023. And then you have to complete the following accounts in the general ledger. All accounts must be balanced or closed off on the 30th of June 2023. Note that some amounts are provided in the answer book. So we have equipment, accumulated depreciation on equipment, and then we have asset disposal. And then the information is that on 31 March 2023, old office furniture was sold for cash at a profit of 200. This furniture was bought at a cost of 35,000 on the 1st of July 2021. So on the 1st of April 2023, new furniture to the value of 192,000 was bought on credit, and an EFT was made to pay for an installment of 3,000. So depreciation is calculated at 20% per annum on the carrying value. The first thing that we have to discuss is financial year end. Okay, so here you are provided with the information from the records of Manari Traders Ltd for the financial year ended 30 June. So let's finish with the financial year end, deal with it. The financial year ends on 30 June 2023. It ends. So financial year, if it ends today, it starts tomorrow. So which means it starts on the 1st of July, but we date it back for it to be 12 months. So if it ends in 2023, meaning it started the following day, which is the 1st of July, but we'll say 2022. If you count from July 2022 to June 2023, the 30th, it's 12 months. So that's how long the financial year took. So if the financial year ends today, remember it starts tomorrow, but just date it back to 2020. If it's 2023, it ends in 2023, date it back to 2021. Okay, to 2022, sorry. But yeah, just make it last year. The following is the following day, but using the last year's using last year, not the current year. When you calculate those months, let's say July, August, September, October, November, December, January, February, March, April, May and June, that is 12 months. So let's answer 2.1. Let's start with 2.1. Then 2.1.1 says, what is accumulated depreciation? So an asset is depreciated in its lifetime. So depreciation is the loss of value of an asset. So when we drive in this car or making use of this equipment, it loses value over time. So we calculate that loss of value, the loss of the newness of the car when it's getting older, as depreciation. Okay, so all those wear and tears, we call them wear and tears. Something has broken, things are no longer the same. So that is depreciation. So it's the loss of value of an asset. Depreciation is the loss of value of an asset. So accumulated depreciation will be the total amount of depreciation written off over the lifespan of an asset. So the depreciation written off every year, when you calculate those depreciations, they make accumulated depreciation. Okay. And then a fixed asset register is a register where all relevant information relating to a specific asset is kept. So when our cars, which are vehicles and equipment, are written in an asset register. So every relevant information relating to a specific asset is kept in an asset register. Yes, so I've given you the answer. What is accumulated depreciation and what is asset register? All right, so we will do the equipment, accumulated depreciation on equipment, and the asset disposal account. So let's go to information and see what we can fill in. So on the 30, number A says on 31 March 2022, old office furniture was sold for cash at a profit of 2,000. This furniture was bought at the cost of 35,000 rand on the 1st of July 2021. So we have the 2,000 as profit and the 35,000 as the cost of the vehicle that has been sold. So on our equipment, we are given the balance brought down of 260. So it's given on our answer sheet. So I have written it. And now what we have to write is the 35,000 of the asset, the cost of the asset that is being sold, and the profit. So what we are going to do there is that we're going to write asset disposal, which is 35,000, the asset that is being sold. So in the equipment account, equipment is an asset, so it increase on the debit side and decrease on the credit side. So we are decreasing asset with asset disposal because what are we doing? We are selling off an asset. So we are taking it away from our books. It is no longer our asset, that equipment. So we are taking it out of the books with its cost. Okay, at the beginning we have assets to the value of 260, but in this 260 we have sold the one with a cost of 35,000. So hence we are crediting it, taking it out of the books of the business. And then this credit of asset disposal needs to have a debit. So the debit of that asset disposal account will come to this asset disposal account. So in this asset disposal account, we are going to write equipment to the value of 35,000. So for that credit, we now have a debit. Okay, we debit it in the asset disposal account. Now, loss on sale of asset. Let me do this. In the credit side of the asset disposal, we have what we call accumulated depreciation. I'm going to abbreviate it. Accumulated depreciation of an asset that has been sold come on the credit side. And then after that, we will have the money that we received from selling this asset. Let's say they say we sold it for 25,000. Profit is another thing. So if they sold it for 25,000, let's say it was paid for cash, we'll say bank. If maybe the asset was written off in an accident, and the insurance is going to pay the next financial year, we will say debtors control here, or yeah, whatever that has been, how the person who has bought the asset is going to pay us will either be a credit, they are going to pay next financial year, or it's bank that's paid by cash. And then we have what we call loss on sale of asset. So whenever we have a loss on sale of asset, it needs to come on the credit side. And then on the debit side, we have profit on sale of asset. So always profit on sale of asset will come on the debit side, and we had a profit of 2,000 rand. So let's, and then you balance your thing. Now let's erase this one as well. We've not gotten there yet. So you see that you have marks without even calculating a single thing. Like you have not calculated anything, but already you have a marks for that equipment of 35,000. You have profit on sale of asset that you were given, that you have written, and then here you have asset disposal of 35,000. Nothing has been done, but you already have marks. So I'm going to try to do some calculations, hence why I have split the screen. So look at this. We have on 31 March 2023, old office furniture was sold. So on that asset disposal, you are going to write the date of 31 March 2023. That's when the asset was sold. So where is it? Here you will have a date just like we have on the debit side. So that will be 31 March 2023. And then down here as well, the date will be for that equipment will be 31 March 2023, and also for the sale, for the profit on sale of asset, because that is when we sold the asset. So the furniture was bought at cost of 35,000. Let's do financial year. So the current one started at 1 July 2022 to 30 June 2023. So that is our financial year. Okay, from the 1st of July 2022 to 30 June 2023. That is our financial year. And now one thing that we have to do is that, let's see, when was the asset bought? It was bought on the 1st of July 2021. So that financial year started on 1, let's say year 1, when it was bought. So year 1 is 1, for year 1 is 1 July 2021 to 30 June 2022. So this is when it was bought. Okay, so it was bought at the beginning of the financial year. So we're going to write 35,000 rand. That's when that's the cost price of the vehicle when it was bought. When it was bought on 1 July, so the financial year starts on 1 July. So it was from 1 July 20. It was bought on the beginning of the financial year. So exactly at the beginning of the financial year, this asset was bought. So we do not have to say this is 12 months over 12. So we are going to say multiply by 20%, multiply by, let's count the months. It's stating the business from July, August, September, October, November, December, January, February, March, April, May, June. So it stayed for 12 full months. So when we calculate that, we're going to get 7,000 rand. So this is depreciation for first year done when the asset was bought. And then now we're going to do year 2. Year 2 started on 1 July 2022, which is the current one, ended on 30 June 2023, which is the current year. Now let's see, when was the asset sold? It was sold on the 31st of March. So when an asset is sold, you start from the financial year until it was sold. That's how many months you had the asset for. So depreciation is calculated on what? Carrying value. So we're going to take the 35,000, which is the original cost, and then we're going to subtract the 7,000 rand, which was the depreciation for last year. So it's the accumulated depreciation. And then let me put that in my calculator and tell you how much I get. So it's 35,000 minus 7,000, and that gives me 28,000, and that 28,000 we multiply it by 20%, and then we'll also do the months. So the months, we sold it on 31st March 2023. So it was in the business from July, August, September, October, November, December, January, February, and March. You see, so that is times 9 divided by 12. So it was in the business for 12 months. I hope you are following. So we will take that 35,000 minus the 7,000. 35 minus the 7,000, we have 28, and then we'll multiply this 28 by 20%, and then what we get, we multiply it by 9/12, and then the final answer is 4,200 rand. So you see, we have two depreciations for this vehicle. It's the 700 and the 4,200 rand. So we need to what? Put this down in our T accounts. Okay, so here we have everything. So let me try and close off get rid of this space. Yes. So here on 31 March 2023, we got the two depreciations. Let's do this. So the 7,000 and the 4,000. So the 7,000 is accumulated depreciation of last year. So its balance brought down on the accumulated depreciation. This one, the 90,000 includes that 7,000 already. So what we are going to do is that we're going to write depreciation. We only write the depreciation of that current year here. So this is the depreciation of the current year. So this is where we write it. This is where we write the 4,200 rand. So it's the depreciation for the current year on the asset that has been disposed. Okay, and then We also need to take out the depreciation of the asset that is being sold. So when we take it out, we are going to say asset disposal. So for asset disposal, we're going to add the 7,000 plus the 4,200. So this is the total depreciation of the assets, that the asset that is being sold. So 7,000 plus 4,200 will give us 11,200. So 11,200 is the accumulated depreciation of the value that is being sold. Okay, so we take it out in our books. That's what we have to do. We have to take it out in our books. So this very 11,200 has a debit, and now it needs a credit. So its credit will be on the asset disposal account as accumulated depreciation of 11,200. So whenever we sell an asset, we need to take out its depreciation on our books. Okay, so that's why we take out all the depreciation on this vehicle that is being sold. So here we are. I hope you are understanding, but yeah, here we are currently. So let's move on. Yes, now on number B, we are done with information A. So now we're going to information B. On 1 April 2023, new furniture to the value of 192,000 was bought on credit, and an EFT was made to pay for an installation of 3,000 rand. So let's calculate depreciation. This was bought in the current financial year, which started on the 1st of July 2022 to 30 June 2023. Okay, this is what new equipment that we bought. The cost price is 192,000. So its cost price is 192,000 rand. So the new furniture to the value of was paid for 192,000. Now this 192,000 rand plus the installation. Okay, so we are going to add the 3,000 rand is the installation. That's how much it cost us to get this furniture. So 192,000 plus 3,000, we get 195,000. So we'll take the 195,000 and then we multiply it by 20% and then multiply it by, let's calculate the months. So this new equipment was bought on 1 April. So we're going to calculate from April until the end of the financial year. If it was bought on the 30th of April, we're not going to calculate that month. But because it was on the beginning of the month, we include the month. So we had the new vehicle from April, May, June, July, April, May, and June. So we had it for 3 months. That is 3 over 12, and that time is 20% times 3 over 12, and that is 9,750. So that is the depreciation for the new vehicle. There we have it. And then after this, we can calculate depreciation for old vehicle. For old vehicle, let's look at the what we were given. On the answer sheet, I was given this 260, which means it was the vehicles at the beginning of the financial year. Before we sold, and before we bought, we had 260. Now this 260, we are going to minus the 35,000 rand that we bought. Let me put them inside the bracket, and then we will also subtract. We are given that accumulated depreciation on old vehicle is 9,000 rand, 90,000, sorry. So we will take the 90,000 rand, and then from the 90,000 rand we will subtract. This is at the beginning of the financial year, so we'll subtract the 7,000. That is the one that has been entered because it's depreciation for last year. So what we get here, that's let's say 260 minus 35,000, and then we'll have 225,000 subtract 90,000 subtract 7,000, and that will be 83,000. And then whatever we get here, we'll multiply it by 20%, and that will be our final answer. Yes, 225,000 minus 83,000 times 20%, and this will give us 28,400. So this is the depreciation for the old vehicle. So the depreciation for the new vehicle, we can see it there. So what we do is that we will say the total depreciation will be the 28,400 plus the 9,750, and then that will give us, this is the new and the old, that will give us 38,150. So this is the depreciation of the new and the old. Here you can still say depreciation, little bit depreciation on the sold asset, depreciation on old equipment. Sorry, the first one is depreciation on sold equipment. You can still say depreciation and write, we're going to say depreciation, and then write sorry, this 38,150, or you can write them 1-1. You can say the 28,000 depreciation, then you say 38, and then you say depreciation and say 9,750. It does not matter. So here we are. I think we are done with calculations. So we bought new equipment to the value of 195. So we have to include that in our equipment account for 192, and then we have to also include the 3,000 rent. Let me show you how to record. So here what's going to happen, we will go to the equipment account, and then in here we will write it was bought for credit, so we'll say creditors control. Write the date in which it was bought, guys, so that is 192. And then we have bank. The installation was paid cash, so it's bank for 3,000. And then we are done, so we just have to close off this account. Look at the bigger side. So the bigger side is the debit side. We'll say 260,000 plus 192,000 plus the 3,000, and then we'll have 455,000, and the balancing figure will be the balance closed down, which will be the opening balance. You say the 455 minus 35,000, and then that will be 420,000. Okay, so that is how you close off this account. This is how we do this account. We are done with this account. Now here we are on the accumulated depreciation account. So here as well, let's look for the big side. The big side is the credit side, so we'll say the 90,000 plus the 4,200 plus the 38,150, and that will give us 132,350, 132,350. That will be our closing balance, and then we say balance closed down. That will be the 132,250 minus 11,200, and that will be 121,150. That will be the balance closed down. So that is how you do that account. And then here we have equipment and accumulated depreciation. So meaning that the amount that we received will be the balancing figure. Okay, so we're going to do this. The bigger side is the debit side, so we will take the 35,000 rand plus the 2,000 rand of profit, and then that will give us 37,000, and then we'll write the 37,000 this side. And then here, because they didn't tell us how we received the money, we'll just assume it's bank, so minus 11,200. So if they didn't tell you, just say it's bank, and then the balancing figure will be 25,800. You see, that's how you do it. If we got loss on sale of asset, the loss was going to be written on the credit side and the bank as well. Okay, that's how you do the asset disposal account. So only on the debit side we have equipment or vehicle, whichever asset that is being sold, and we have profit. If there's no profit, we don't write anything, we write the loss on the credit side. It's very important to practice accounting, so whatever that we have done, you have to practice it. Okay, practice makes easy. You get a question at school, practice it. That's how you become better at accounting. Do exactly the question that you did in class. See if you are able to get answers, and that is how you get it right. I showed you in this video procedures of doing this T account. So with these procedures, you can be able to do a lot. Okay, now with this same information, let's try to do a fixed asset note. So this is the equipment. This is how you will be marked on this question. So if you write asset disposal is a right, bank, creditors control, those are marks. The balance closed down, balance the account, you're going to get part marks for just that balance closed down. And then here you have the accumulated depreciation on equipment. So when you have taken out the asset disposal, that 11,200 was going to be right, whether it was wrong or it was right. And then the depreciations also, where we have squares, just know it's part marks. Whether the amount is wrong, you are going to get your marks. Here is the calculations, include the calculations when they give you a section for calculations. And here is the asset disposal account. So I've done our fixed asset note. We have carrying value at the beginning, which is the 1st of July 2022. Accumulated depreciation, movements, we have additions at cost, disposal at carrying value, depreciation and carrying value at end, which is on 30 June 2023, which is the end of the financial year. Now let's go up and look for relevant information. Now we are given here that the opening balance of equipment is 260, that is the cost, 260,000, and we are given that accumulated depreciation on the opening balance, it's 90,000. So here we are going to write accumulated depreciation, we are given it's 90,000. So depreciation is always subtracted, so we show it by including the brackets. So here we have 260,000, and that is at the beginning. So we have the cost equipment to the value of 260. So you will say 260,000 minus the 90,000, and then our carrying value for equipment will be 170,000. So that's what we are right at the beginning of the financial year. That's what we will have there on top for the fixed asset of 30 June 2022. And then for movement, we have addition. Okay, we bought a car, and that car that we bought is this one of, how much is it? 195, the 192,000 and the 3,000. So we have, it's not a car, sorry, we have equipment of 195. So additions, we write them at cost. Okay, so those are the costs that we have. And then we have disposal at carrying value. So disposal is what we have sold. So for us to get the carrying value, we will take the cost of the asset, which is 35,000. The 35,000, we subtract the accumulated depreciation, which is 11,200, accumulated the carrying value at the point of sale, and then we will get the 23,800. So you're going to take 35,000 of the equipment that is being sold, and then subtract the 11,200 for the accumulated depreciation. So that will give us 23,800 rand. So this means we will dispose this at carrying value, which is 23,800 rand. We can subtract it because we are disposing, we are selling. And then for depreciation for the year, we are going to write all the depreciations for old, new and sold equipment. So we can go to the accumulated depreciation account for this. We're going to write the 4,200 and the 38,150. So we'll say 4,200 plus 38,150 will get 80. No, it cannot be that will give us 42,350. So here we get the 42,350, and we got that by saying 4,200 plus 4,200 plus 38,150. So that is how we got that calculation. Yes, and then we can say for the carrying value, we got the calculations by saying 35,000 minus 11,200. So that is how we got those amounts. Okay, and then we have everything at the beginning. So for us to have cost at the end, we are going to say cost at the beginning, which is 260. So we say 260. We add additions, which is 195. That's how much we bought. And then we will subtract disposals, which is 5,000. And then we get, here we'll write 420,000. So this 420 is this one that we see here, that balance closed down. That is what we write. And then accumulated depreciation at the end is this 121,150. Okay, yes. So on the balance closed down, or you can say accumulated depreciation at the beginning, and then you add the 30 plus the 38,150, which is the new and the old vehicles. And then, oh, not plus 38, sorry, is the 90,000, which is accumulated depreciation at the beginning, plus 42,350. Okay, and then what we get, we minus 11,200, which is what accumulated depreciation of the vehicle that has been sold, and that will give us 121,150. So guys, when you sell an asset, you have to take off its cost and its accumulated depreciation from the books. So the accumulated depreciation of the asset that has been sold needs to be taken out completely. So we say 420 cost at the end minus the accumulated depreciation. That will give us 298,850. So that is how you do this fixed asset node. Thank you very much for watching, guys. Until the next one.